Many people in the internet talk about dividends and how this can make you money for the future investing in companies that pay dividends. So there is a company that pays 10% in dividends every year. But I want to show you how investing in these high dividend companies is not the best option for you if you're thinking about the long term. So I am sure you're going to learn so much in this short video. When you are learning about dividends and investing, most influencers, they tell you that you need to pick the company with the highest dividend and how this can multiply your money for the future. The problem is that most people don't understand how dangerous this can be and how this can bring a big risk for your portfolio. So let me show you this quick example. Look at this company, very well known in the United States, which is called Walgreens. This company sells pharmaceuticals all around the United States. This company pays a dividend of around 10%. This is very good because people say, wow, it pays me 10%. So no matter if the stock market goes up or down, the company continues to pay my dividend every single year. And even better, since 2016, this company have increased their dividend year after year, starting with 1% all the way to 10% right now in 2024 when I'm recording this video. The problem is that if you look at this graph, you can see that anyone who invested in 2016, they have seen a decrease in their initial investment every year, even though they are receiving dividends. The price of the stock went from $80 a share to less than $10 a share recently in 2024. So this means that their market cap have decreased to a little over $9 billion. And if we look at the margins for this company is generating a little more than 17% in gross margin. And after all expenses, they are actually generating losses of more than $5 billion. So if they are losing money in the bottom line, where are they getting their money to pay all these 10% dividends to all their investors? It comes from their market cap. So they are actually paying money from the company's money. But this is not sustainable, especially after the announcement that they recently had where they plan to close 1,200 stores before 2027. So think about it. You don't need to be an expert analyst to realize that this company is closing stores. So what's going to happen with their revenue? Their revenue is going to decrease, which means that their gross margin is probably going to stay around the same or less because the overhead continues to be the same pretty much. So what's going to happen with the net income? This is going to probably produce even more losses through the years. I went to Walgreens yesterday and the place was almost empty. It didn't have that much product. So with all this news, this is very concerning for all Walgreens investors because this company is actually spending more money than what it's generating. So let's take a look real quick at their debt. This company has a little more than $3 billion in cash, and it has a total debt of more than $33 billion. So generating losses, closing stores, paying 10% dividends to their investors, where is this company going to sustain all these expenses during the next 5 years? I will be very concerned with a type of investment like that even though calls your attention for the high dividend, this could mean a risk of bankruptcy, and this could bring a lot of risk to your portfolio of investments. So I created this video because I want to help you understand how this investment world really works. I want you to be able to select cautiously these great companies that could multiply your money for the future. I am glad you were able to learn a little more about investing in this short video because my purpose is to help you become an excellent investor.